Once you start doing deals, you're going to be busier than you ever thought possible, but you're going to be making more money than you ever thought possible as well. So,
hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to Pillars of Wealth Creation. I'm your host, Todd Dexheimer. With me, excited to have David Lindahl. Dave, how are you doing today?
I'm doing good, Todd. How are you?
I am doing excellent, man. And I'm just excited to have you on. I was telling you before that when I was first starting to get into real estate, you're just trying to figure out what's going on. There's so many different avenues, right? And a lot of people get the shiny object syndrome and go here and there and everywhere. But I heard you speak and I was like, wow, it just resonated with me, what you said, your motivation, and the reasoning behind multifamily. And so you motivated me to go that route. So I'm excited to have you on the show. A little bit about Mr. Lindahl here. He has a portfolio of over 9,000 units, been investing since 1996. So a couple of years here in the industry. You also have RE Mentor. I know you do a lot of training. You were maybe one of the only trainers, back in the mid 2000s, only people teaching multifamily at that time. And you're still doing it. Your company has done really well. So excited to have you on. Why don't you give our listeners maybe a little bit more kind of about your background, where you came from, and really what your focus is today?
Quick background was I was in a rock and roll band from the time I was 16 to 24. Left with as many brain cells as I could. Couldn't figure out what I wanted to do in my life. I just know I didn't want to be broke anymore. Tried a bunch of different things and then saw an interview on biography with a guy by the name of Harry Helmsley, who started with nothing, ended up owning the Empire State Building, and did it by buying and selling multifamily properties, owning a big portfolio. So on that interview, he said, there are groups of people out there that will give you money every month to pay down the mortgage, to pay a maintenance guy to swing the hammers and clean the toilets, to pay for a management company to take care of the tenants so you don't have to collect the rent or take any of their phone calls. And they'll give you so much money every month, they'll cover those bills and you'll have extra money. They'll give you passive income just for getting into the deal. And you can do it with no money out of your pocket. And I thought, damn, if that's true, I'm in. And, there's a lot of fear involved at the beginning.
Yeah.
And I kept 9 months later, when I did my first deal, I come to realize that it was true. And then, 9,000 units later, I'm still doing it.
So what was that first deal?
It was a 3-family property on 25 Newton Street in Brockton, Massachusetts.
Okay.
I was bird dogging. I'd figure out how to do it. There's nobody out there teaching at the time. So there was a bunch of single family stuff. I joined the local real estate investment group. There was a couple of guys in there investing in multifamily. So I took them aside and I picked their brain, took them out to lunch. They kind of mentored me through my first few deals. But I was so afraid to do my first deal that I would actually bird dog the deals to them, make 2 or 4,000. And then finally, this 3-family triple decker with 4 bedrooms in each floor. The more bedrooms you have, the more money you're going to make. Was on the market, and I tried to bird dog it to them, and they were too busy. 1 month goes by, 2 months goes by, and I was like, guys, this is a great deal. Pay me, take over this deal. And It was almost like the hand of God came out of the sky and slapped me across the face a couple of times and said, look, I sent you good deals already. Take this one. This is the best. And I did, but I was so afraid to do it. I had my best friend who was just as broke as I was go in it with me because my father kept telling me, Dave, you invest in multifamily, you're going down, because he thought the tenants were going to destroy the place and they weren't going to pay the rent and I was going to get foreclosed on. And I was this crazy kid coming from a rock and roll band. He just didn't want me to stumble again, I guess.
Yeah. Good intentions, right? Tell you, hey, you can't do that. You're going to lose everything. I think a lot of us get sidetracked by good intentions.
Yeah. Good intentions and limiting beliefs.
Yeah.
Is what it is.
Absolutely.
But anyways, after I did that first one, I did 3 more. Within 3 months, I had 3 more. Within 6 months, I had 9. And within the first year, I had 11. Within the first 3 years, I had almost 40 of them. 3 to 6 units. I wouldn't buy anything bigger because I was afraid to go bigger at the time.
Okay. That's what I was going to ask. So you're buying these 3 to 6 unit properties. You're just afraid to go bigger, which I get. I did that for a long time as well. I was stuck in kind of that same type of area. What made you go, all right, like, I'm going to start buying. Did you go from there to buying like 100 plus, or did you like slowly work your way up? How'd you go?
It was a 40 unit in Montgomery. So I'm from Boston. And so what I started learning about during those 3 years that I was buying those properties was market cycles, what moves markets. And I realized that we had made a lot of money in a short period of time, but we were on the right side of the market. The market, I entered the market, was just going up on the incline. So I made a lot of equity, the rents increased, I made a lot of cash flow. And I realized that if I don't either take my money out in cash or move it into another property, another market, I was going to lose my equity, which was millions at the time. And so I started learning about the market cycles and how to follow job growth around the country, household formations, populations. And I learned that Montgomery, Alabama was having a new Kia plant being built, bringing in 5,000 new jobs into into a market that had what's called a barrier to entry, which means they had floodplains around it, couldn't build there, supply remains the same. So with every new job that comes into a market, there's what's called the multiplier effect. So it's anywhere from 3 to could be 15. Huntsville, Alabama has a multiplier of 15 because it's the highest per capita white collar workers. So in Montgomery, it was only 3, very poor area. But yet the 3 meant 5,000 jobs was actually 20,000 jobs coming in. The butcher, the baker, the candlestick makers.
Yep.
So we've got 20,000 new jobs coming into a market where there's a barrier to entry. Supply is going to remain the same. That market took off. I wanted to buy small 3 to 6 unit properties, but because of my 1031 exchanges, I was forced to buy a bigger property. So I bought a 40, which I was really afraid to, but I did. And then I realized, wow, this 40 wasn't too hard. And then a 80 unit property came my way, and I bought that, and that wasn't too hard. And then I jumped into a 350 unit property. Realizing after I did it, there's a lot of fear involved in that as well, but that it was actually easier to do those bigger deals than it was to do those smaller deals. And then from there, we just took off. We started, we're in 18 different markets. At one particular point, we're in 18 different markets, all emerging at the same time. It was crazy. One time we were doing 1.5 complexes a month, anywhere from 150 to 300 complexes a month.
That's a lot of transactions.
That's
a lot of work. Like,
it is, but you know what? I like to tell people when they first come in and start learning about this, is you're going to be busier than you ever, once you start doing deals, you're going to be busier than you ever thought possible, but you're going to be making more money than you ever thought possible as well. So they come hand in hand, it becomes a joy.
Yeah. Yeah. Well, yeah. And it's enjoyable to do. If you enjoy doing it, it's not like it's work, right? You got to learn how to delegate a bit, but enjoy doing it.
Here's the thing, some people get in and like you and I, we love the transactions. We love the deal. We love like going out there, the chase, and you get it and you operate it. But there are some people that they just use multifamily as a talisman to do what they really want to do. You know what I mean? They use it as a vehicle to create wealth. Once they've attained that wealth and they get that passive income that's going to be coming in, then they switch over to whatever it is that they're really passionate about in life. Knowing that they don't have to worry about money anymore. They can just follow their joy.
Yep.
And that's what I love seeing as well. As you know, I've got a education company. We started that in 2002. And we've had so many tens of thousands of people come through here, and to see those transitions happen on a regular basis, it's a beautiful thing. It's one of the legacies that I'm most proud of. I think it's changing people's lives.
Yeah, that's got to be fun to see that these alumni that are actually doing deals, that are doing big things. I know several people that have gone through the David Lindahl, program, and they're doing some pretty big things. And so it's got to be pretty cool to watch that kind of happen and evolve.
Like anything, there's work involved. Yeah. And if you do we've got a proven system. And if you do the work, you get results. If you don't do the work, you don't get results.
Yeah.
So, there's a lot of people that want it, but don't want to do it, So to have somebody go out and follow the system, that's like the biggest reward we can get, because we know it works. And then have somebody follow the system, and then they come back and say, look what I've been able to do. That's the joy.
Yeah. Is that you think the difference between those who, because you get a ton of people that sign up and take your courses or read your books. Yeah. You've got 3 books? Is that?
I've got 5 different books.
5 different books. Okay.
Yeah. 3 of them number 1 bestsellers.
Yeah.
4 of them number 1 bestsellers.
Well, then I'm going to have to pick up the other ones. I really loved the MultiFamily Millions. And anytime somebody asks me what book should I read, that's the number 1 book. And I enjoyed the emerging markets book too, because that's just kind of, I like to dig into those types of data and numbers and stuff like that. But anyways, you get people that, go through the whole program. And they even maybe have the coach and do the whole thing, and then they don't get anything done. And then you got the guys and gals who just explode, they
Yeah.
totally get it. Like what is the difference? Is it just following the system, or what is the difference?
It's mindset. When I first started, for the first 3 years, I wasn't getting my students weren't getting the results that I thought they should be getting, and I couldn't figure out why. We had some people that were, killing it. Then we had others, a lot that weren't. It was like, why not? And then I realized that it's the same thing, problems that I had, limiting beliefs, mindset. I come from a lower middle class family. My mom was a fish cutter on the fish piers of Boston for 27 years. My dad worked 3 jobs to support us. And my mom always used to tell us that, the good stuff's for the other people. Isn't it nice what they have? But, that's for them. We'll never be able to get there. And when I turned about 27, 28, I started saying, why?
Right.
Why not us? And I got, fortunately, somebody had given me a tape set that they found, Earl Nightingale's Lead the Field. And they said, hey, you might be interested in this. And I thought, and I plugged it into my car, and I was like, wow, this is pretty interesting. And I listened to that like 3 or 4 times in a row, started doing what it said, started getting results, then got Anthony Robbins, Awaken the Giant Within, Raise the Bar, The Magic of Thinking Big. And I started feeding my brain, all of these positive things, all these different ways that you can live life and attract a good life to you, which helped me break through the limiting beliefs I had. And I had a ton of them. My mother and father used to, at one point I had several big companies, and I used to have this combined Christmas party. And I was a crazy kid, and my parents loved to tell stories about my craziness, embarrassing stories. So one guy comes over to me one time and says, I was just talking to your parents. And I was like, yeah, what'd they tell you? And they said, they said you were adopted. I said, what? Yeah, it's the first time I heard that. They said, yeah, they say you must be adopted because they can't figure you out. Nobody in the entire family is like you. Nobody thinks like you.
Yeah.
And you know what? I thought like them up until I was about 27. Until I started feeding myself the other stuff.
Yeah.
And that's the difference. And that's what we started doing, changing the program too. So now we start off with mindset, how to change your mindset before you get started in the actual investing. And that helps. That's been a big difference.
Yeah, that's so good. And it 100% true. I see the people that I talk to that are successful, the people that aren't. It's very much true. Just taking action. Like, so many people want to get super educated. And education is great. Like, you got to get educated. You have to have mentors. You have to do all that. But eventually, you're not a real estate investor unless you're buying stuff.
Yeah, this is what I found. There's the people that make a decision that they're gonna do it no matter what happens. What obstacles come in the way, they're gonna do it. Mm-hmm. Those are the ones that become successful. Yeah. The other ones, there's this mentality, right? And that is that you're never gonna feel like it. And when you realize that you're never going to feel like it, and recognize the fact that you don't feel like it, but know that if you do it, what you don't feel like doing, you will eventually become successful. That's a big mindset shift. I used to phrase that as feeling uncomfortable. If you're willing to be uncomfortable for 3 to 5 years, you can be comfortable for the rest of your life, basically. But you've got to get used to being uncomfortable and embrace the suck, as they say in the Navy SEALs. But it's true. That's how you grow.
Yeah, absolutely. What are you doing today? I think a lot of people want to know that. People respect your opinion, your emerging markets, like what markets are good. What are you doing today in the multifamily? Are you buying? Are you kind of waiting? Are you sitting on the sidelines? Are you selling? What are you doing today?
We've sold a bunch. It's a crazy market right now. One of the things I've realized all through the years is that there are always good deals out there, but those deals depend upon the relationships that you have, because the good relationships will bring you good deals in any market. It doesn't matter.
Yeah.
But this is a time where, because of COVID, there are so many office and retail investors that have come out of that space and put their money where they think it's safe, in apartments, that they're really bidding up the prices. Where we thought there was going to be a correction happening, COVID actually extended when that correction will happen, and it will start happening.
Right.
But there are still one-off deals out there, and that's what we do now. Based on the relationship that we have, we're doing a student housing deal in Mobile right now. We're putting together a hotel deal in Texas.
Is it a hotel conversion or just a hotel, straight hotel?
Well, it's a hotel deal, right? But there's a big rise in the short-term rental market.
Yeah.
So we're going to take this hotel and we're going to half of the doors or half the keys, they call it with hotels. Half of the keys we're going to turn them into short-term rental, and that's going to increase the value of the property exponentially.
Yeah, interesting. I know a lot of people are taking hotels and turning them into apartments,
Apartments,
small
assisted living facilities, memory
assisted
care
living.
facilities.
Yep. Have
Yeah,
you done any of that?
I have not. I've looked into it though. We've done the research. There's so many different opportunities out there. You've got to decide on which ones you're going to go after. So we see them and then we try to pick the low hanging fruit and hope that we're right when we do it. And so that's always been in my sights. I just haven't done it yet.
Yeah. You're right. You got to pick. You got to pick one. You got to stay in your lane too, right? You can't go everywhere.
Yeah.
Are there certain markets that you really like today?
Yeah. We always like Dallas. We had at one time.
Even still like Dallas. It's been great for so many years.
Yeah.
You don't think it's gonna end today?
Oh, it will. I don't think it's going to end today, but this is what happens in Dallas. When it does go over the other side and on the down cycle, it lasts a very short period of time, and it starts going back up again. So the damage, the state of Texas and the state of Utah are similar in the sense that when there's a down cycle, it lasts a very short period of time, and then it starts going up again. And that's because of the government. The government is so business friendly in those states that it rebounds quicker.
That makes sense. Yeah.
Here's the trick with Dallas for anybody that's listening. So Dallas is a really good market, but the best markets are the sub-markets around Dallas. The Longview, Tyler, Amarillo, these Temple, these markets that Dallas will always overbuild. That's the cycle there. There's so much land there. There's so many builders there that once the hot season starts, everybody starts building. They overbuild, but yet in the sub-markets, the rents typically don't get high enough to support new construction. So the inventory remains the same. So therefore, as you get to 95% occupancy, which means that's the time to raise the rents, you're always looking around to see what's being built, to prevent you from raising the rents. And in those sub-markets, very few times do you see things that are being built that's going to affect you.
Yeah.
So that's a strategy that we've used for years.
So you like Utah, you like Texas, any other markets that you like?
Yeah, so I really like Vegas right now because Vegas is on the comeback. They get hit really hard. Huntsville, Alabama has been good since I started investing there in 2006. It's a really crazy market right now, but if you have the right, we just sold the deal there. We had it on the market we had an unsolicited offer, a cash offer coming at 5.6. And they said they're going to close in a very short period of time. Well, they started, like buyers do sometimes, they start dicking around with us. And it turns into, we're going to a month, 45 days. It's like, hey, I thought this was going to be an easy cash sale. With this property, we weren't planning on selling. Well, all of a sudden, within a week's period of time, we got 3 unsolicited offers, 6.2, 6.5, and 6.4.
Wow.
So in that short period of time, the market rose that quickly there. But at the same time, there are deals there. I know some of my investor friends and students that are doing deals there, and they're meeting the criteria. We have a very conservative criteria for buying. So they're meeting the criteria, but they're always either an off-market deal or a pocket listing. It's never anything you're going to see on Kretschky, anything that you're going to see on a broker's website. It's something that you get a phone call and say, hey, I'm going to send you this deal. Take a look at it. Tell me what you think. Act quickly.
What when you were buying, you're expanding, you're talking, going through that story. I was going to ask you, were you using your own money the whole time, or were you bringing on investors kind of early on from the start?
I used my own money until I got to about 800 plus units, and that's when I moved into Montgomery. And I did my own money with the 40, with the 80, but with the 350, I saw the potential. I saw how much easier it was to do those larger deals. I saw that I could actually build a team in each particular market as I moved from market to market that could be my eyes and ears and be my success. And that's when I changed my goal from 1,000 units to 10,000 units. And I thought I'll never be able to buy 10,000 units with my own money. So I started learning about syndications and raising private money.
Yeah. What's a couple key factors raising private money? I mean, how does somebody start doing that and doing it well?
Well, it's all about it's getting your message out there, really. the easiest thing to do is be at a social situation and have somebody ask you what you do. Everybody always says, "Hey, what have you been up to?" "Oh, I started investing in emerging markets." Like, what? And then they actually close themselves. It's a really easy path to go down. Same thing at business events. You got to be attending business events where business owners are. Most business owners know about real estate as well, would like to get involved, but they're too busy in their business. And they're all there to network. So if you just start talking about real estate, don't go in there looking for money, but just talking about either the deals that you're doing or the opportunities that you see, or just have that phrase when somebody asks you, it works out well. You become the guy. You become the guy that people go to when they're need some information about the real estate markets.
Yeah.
Raising money is actually not that difficult.
Yeah. Yeah. A lot of people, I think, are really nervous about it. And how do I talk to somebody? How do I even approach them about it?
Well, you can certainly use the approach that I just talked about and let them close themselves. It's the easiest way to do it. But I think what the other underlying point is, I've never done a deal before. I've never raised money before. That means I'm not confident these people will never give me my money. That's what's in people's minds, And then the other thing is the person that you're talking to, they're assessing you and they're thinking, can this guy give me back my money? They're not even concerned about the returns. Like, can this guy give me back the money?
Yeah.
So the whole lot, you got to get educated. You got to know what you're talking about. You got to, if you haven't done a deal before, then you get educated and you build a team around you. And if you've done deals before, then, you talk about it. But that's how you start out. Everybody starts out the same way. I started out the same way. I was broke. A lot of people start off broke. Mm-hmm. And everybody, hey, some people will, some people won't. What can you do? Some people will invest in you. They're looking at you, your integrity, the type of person you are. They're assessing all those things to determine whether or not they're going to give you money to do the deal. And then they'll ask you, hey, you're putting any of your own money into the deal, right? Which if you're broke, you're not. And you just say, no, I put in the equity into the deal. And some people will say sweat equity. And some people will say, well, if you don't put in any equity, then I'm not going to put any money into your deal. And then my response has always been, and I still don't put money into my deals. My response has always been, okay, I can certainly understand that philosophy. A lot of people have it. If in the future you decide that, you do want to do some deals with us, we'll be happy to partner with you. Because what happens is they're saying that because they don't know you, they don't understand you. You know what I mean? They haven't figured you out. They don't know if you're trustworthy to give them their money back. But then when you start doing deals and your reputation starts going around, then all of a sudden they hear about you again and like, hey, maybe I will go back. So you don't burn a bridge. You just, you keep it open. You keep the lane.
Well, and you're not bending to their rules either. It sounds like you're this is the way you do it, and that's it.
Some people won't, and some people will never put money in your deal if you don't have any skin in the game, as they say. But that's okay, because there are a ton of people that will.
Yeah. So you just got to decide what's best for you. You're going to put skin in the game. You're going to not. You're going to do what are you going to do? And you got to just move forward with it. It sounds like
it's a numbers game. This whole thing, I have a mentor that years and years ago, when I first started investing in multifamily properties, taught me this formula. It's R equals C times F. The amount of money, and this can go in any business, any industry, the amount of money that you're going to make, the R, is going to be equal to how competent you are at the key skills that you need in that particular industry or business, and how frequently you do certain key actions. So the frequency, number one, you have to be competent in talking to somebody about when you're raising money or getting deals. And then you have to get out there in front of people. You have to do it frequently. It's a numbers game. So as long as you're hitting those frequencies, the people that fail are the people that don't hit their frequency numbers. You can become confident in all of those key skills. And what you'll learn is some of those things you'll never be good at, because that's just right brain and left brain. And those are the things you delegate out to other people. But you can't miss the frequencies. As long as you're doing those frequencies, you'll be successful. It's weird how simple it is, but it's just that simple.
Oh yeah. I mean, it makes sense. I mean, it goes the same thing with, like you said, it goes anywhere in business, right? I mean, you talked earlier about building relationships with property owners, brokers. Again, it's about the frequency. If you're not calling them, if you're not meeting new people, you're never going to get the good deals.
Oh, absolutely. Yeah, we tell our coaching students, we call it 2 and 2, a success formula. And that is put in 2 offers a week and go into 2 networking situations a week. It doesn't mean they have to be good offers, because in reality, we know most of the deals out there at any given time are going to be crap, But what you want to do is you want to go in there, analyze the deal. We have a script that they give to the brokers. We call it the lowball offer script. You always want to present it. And the whole idea is you're not expecting to get the deal. You're trying to establish a relationship with that particular person.
I like
to
that.
get a potential next deal.
Yeah. Yeah.
And it's the same, in the frequencies of getting in front of people, could be a social situation or a business situation, but just get out there and get into a situation where people can ask you that question. Hey, what do you do?
Yeah.
Simple as that.
Yeah. I like it. Um, let's talk your businesses. So you've got multiple businesses. You've got the coaching, you've got the multifamily, the 9,000 units. You didn't get there by accident. You've built successful businesses. You've got teams in place. You've got people that work for you. Well, let's talk about that and how did you build your business successfully? Maybe give me like, 3 tips that our audience could take and implement it in their own business on actually building out the business aspect of it. Because so many real estate investors, I think, just focus on getting a deal done.
Oh yeah, well, in the multifamily space, the first thing you got to do is you got to treat it like a business instead of a deal. If you treat it like a hobby and doing one-off deals, you can make some money, but you won't make wealth. You treat it like a business from the very beginning and start putting systems together and using those systems to source deals in on a regular basis, to analyze deals on a regular basis, to offer on a regular basis. And then when the deal goes through, all the different things you have to do in the process of due diligence. And then when you close, you put in systems, you put in all those systems in place, and then you're treating it like a business and it starts to run like a machine. If you don't do that, then you might do a couple of deals, and most of the people that do a deal here and there, they're frustrated investors, and they tend to leave the business. They never really get any traction in the business. Let me give you a couple of books that really got me. We're talking about building businesses, because I built my landscaping company, my construction company. I built a real estate brokerage company to number 3 in the city that I built it in. And then I built the education business. I built my real estate business. The very first book I read that changed everything was in between my landscaping business to construction. And that was The E-Myth Revisited. Mm. Yep. And that taught me to work on the business, not in the business. And my biggest decision back then was, do I hire another person so that I had one person mowing lawns with me in my landscaping business? And the decision was, do I hire another person to take my place mowing lawns so I can focus on the marketing to get more accounts? And the other question was, can I afford it? And then, little did I know that, I read the E-Myth Revisited. I focused on the business. I focused on the marketing. I hired that other person, and then that business started taking off. So that was a really good book. And I follow that constantly. Another good book was John Warrillow's Built to Sell. So that's all about how to build your business as you're building it, and in mind knowing that you're going to sell it, and what the different things to put in place. I go back to that book on a regular basis.
Well, and that makes sense, right? If you're going to build it to sell it, that means you got to figure out how to do it without you in place. So nobody's going to want to buy a business or pay top dollar for a business if the only way it's operating is the person, that's started and founded the business. That's going to be going away.
Exactly. And if you are the brand or you are a key component in there, then they give you like a certain amount of money, but then they get this clause that you have to stay in the business for the next 3 or 4 years to get the majority of your money, which is a crappy way to sell a business.
That's a crappy way to sell. Yeah. Well, Dave, what's the biggest mistake you've made? And, how have you learned from it? How can you teach our audience?
The biggest mistake I made was I bought a 400 unit repositioning deal in Huntsville, Alabama, way before I should have. There are 2 types of deals in multifamily. There's a momentum play where cash flows at closing. And then there's a repositioning where it's somewhere below 85% occupied, and it needs some sort of work to get it cash flowing again. Those deals are very lucrative when you do it right. But what I didn't know at the time is you should start small, which I had. I had done a number of them in Boston, smaller ones, and then work your way up. Well, I went from the smaller ones and I jumped to a 400 unit that was 43% occupied at the time. I didn't realize that 43% occupied meant only 26% were actually paying. And then it would actually go down before it would go back up again. And a 3-year project, which I thought we were going to make $3 to $4 million, ended up being a 6-year project where I ended up giving the investors their money back, and I left with quite a few bruises. It was the longest 6 years of my life, but it's over. So I think the lesson is if you're going to get started in multifamily, Start with the momentum plays that cash flow at closing. So therefore you have, victory, and they're easy to run and manage. And then you should sprinkle in repositionings, not more than 30% at any given time though, and start small and work your way up.
Got it. That makes sense. Are you are you doing repositionings at this, like, would you take it on repositioning right now?
This is what I've learned. Okay. So I do what's called a micro repositioning. So in all the years I've been doing business, at the end of every year, I would analyze my deals. Did the ones that I sold, did they come out profitable the way I thought they would? If yes, great. What caused that? If not, not so great. What caused that? So as I'm doing that every year, I start noticing a pattern somewhere around 7, 8, year 7, 8, or 9. And I realized that the deals that I made the most money on had a certain criteria. They were losing their occupancy. They usually say the market's like 90% occupied. These were below 90%, but they weren't below 85%, which is a repositioning deal. So they're on their way down. There's some sort of a problem with management. And if they were a B property in a B neighborhood, 4 classes of property, A, B, C, and D. A's are great, D's are not. So they're a B property in a B area, and I could fix the problem. If I could figure out what the problem was, that's the first thing. And then if I could fix the problem, that was the second question. Then those properties, I was able to get in there, and the other criteria was you didn't put more than 3 to 4,000 per door into the units when you're fixing it, into the whole property. So that meant on a 100-unit property, and you can do this with smaller deals too, but on a 100-unit property, that repositioning is taking only 3 to 4 months to do. So now the only thing you have left is to raise the rents back up to market. And that typically takes another 12 months because that's, the leases go with the property. So you're looking anywhere from 12 to 18 months, and now you can refinance that deal out. You can pay off your investors, and now you and the bank own the deal yourselves with a nice piece of equity in there. So those are micro repositionings. Those are the deals we focus on. They're the less risky deal. I call it the fastest way to make $1 million if you're doing anywhere from 75 units plus on these micro repositionings. And in life and in real estate, there's risk involved, and you're always trying to look for ways to minimize your risk. Yeah. And this is one method that we use on a regular basis.
I like it.
And it's a great method to understand right now too, because of COVID. What COVID did, it was shook out all the bad operators, all the bad landlords, okay, because they couldn't survive because they were bad. They weren't doing best practices. And so those properties are coming back. Those are the micro repositionings in the market right now. So we're seeing far more micro repositionings than we've seen in years in the market. Yeah. So it's an exciting time.
Yeah, I agree. What's a daily habit that you have that you would say helps with your success?
I get up. I try to get up before my kids. I have 3 kids, 2 of them 5 and 1 of them 3. And, they do this rotation where one of them starts getting up at 5:30. I'm natural. I get up at 5 o'clock in the morning. It's just normal for me, wired like that. But then my kids, so I like to get up. I like to meditate for a bit. Then I like to stretch out. Then I like to work out. Then I'll stretch out again. But with kids, it's difficult. So the one thing I do though is I get up early enough that I can get my meditation in. I don't know if you read the book by Dr. Joe Dispenza, Superhuman. Mm-mm. Have you read that book?
No, I haven't.
That's an awesome book. Anybody that's looking to change a mindset, this is one of the great books I've discovered. I think he wrote it about a year or 2 ago. And he has a lot of different meditations on how to do it. And if you've got an illness and you want to reverse that illness just by using your own mind power, this is a great book for that as well. He's got a lot of meditations. Some of his meditations are 20 and 30 minutes, but some of them are 45 and 50. So if I want to do like a longer meditation, I have to make sure that I get up at 4 to prevent my kids coming into the middle of the meditation. And it's self-guided meditation too. He's got a lot of great stuff. That guy is good. It's one of the best discoveries I've had in a while. I don't know if you know this, but
called it Superhuman.
Superhuman, yeah. There was a period of time where I was through. I had a spine injury. I had 2 herniated discs. I have 3 degenerated discs, and I had the top of my spine was like coat rack. I was in so much pain, and they couldn't give me anything for it. The drugs wouldn't work. Fortunately, the opioids didn't work. And I was teaching at the time. I'd go up on stage for 3 days teaching a boot camp, and I would try anything to get out of pain. And somebody gave me this book, Mind Over Back Pain. And it basically said, if you see yourself, if you think this book was written for you, it's a very short book. They said, then you've got what's called the mind-body syndrome, and then go to this writing program. And so I read that book and I was like, this book is all me, and written specifically for me. And then I went to this website called TMZ Wiki, and it's called, there's this little thing on the left that said structured education. And then I went in there and there's a 60-day writing program, and it's all mental. And I was in so much pain for 2 years. My right leg, my right calf wouldn't talk to my brain, so it atrophied. I was dragging my leg around. I was my sleep level was 3.5 hours a night, and it wasn't contiguous. I was gone emotionally. I was gone. You know, when you're not sleeping, that's what kills you. So yeah, I started reading that book, and I was a hard healer. So it took me 3 months to heal, but I healed it with my mind. So that showed me, it's like you can do amazing things with your mind. So I started really focusing on the books that are all about the mind.
Yeah, that's pretty amazing. That's an amazing story, man. That's crazy. I can't imagine being up on stage for 3 days with like debilitating back pain. Just ugh.
I would ask people for drugs from the stage. It's like, anybody got any drugs? Really need it.
Who's this guy teaching us?
Yeah, it was bad.
That's good.
During the break, I would go into the conference room and just lie on the table, laid out straight. That last night, I wasn't in pain in Washington, D.C. I'll never forget. It's like, it works. You know, it works gradually. You know, the mind the mind wants to control you. You know, you're not your mind. You know, you're different from your mind, and your mind wants to control you. And the book says, you know, once your mind figures out that you figured it out, then it throws all kinds of pain at you to make you think that you don't. And I remember that morning when I realized that my mind had given me pain in a place that I'd never had it before. Because typically your mind will follow known pain paths to reassure you that this isn't it. So anyways, that morning when I realized I had beat my mind, I was like, I won. And I was yelling at the mirror. I was like, I was like ragged back then. And sure enough, that next week was hell. I mean, my minds were so much pain at me, but I was determined. I knew, I was like, I beat you. And then I was on stage for a day, the start of a 3-day event in Washington, D.C. That Friday night, everybody goes out, you know, Dave stays back, lying stretched out on the floor as usual. All of a sudden I realized I'm not in pain. It's like, wow, I'm not in pain. What am I going to go out with everybody, catch up with them, or what? You know, and my inside of my head said, no, just relax and enjoy this, you know, enjoy the fact that you're not in pain. And that was the last time I was in pain for my back.
Cool. Man, there you go, people. If you can't figure out how to get your mind to cooperate with you, just take that in right there. Mind can do some amazing and powerful things.
And if you've got back pain, fibromyalgia, you've got a couple tunnels on the road on your wrist, read that book, Mind Over Back Pain. And if you can see yourself on those pages, go to this website, TMZ Wiki, and you'll find the writing campaign in there. Get you out of it.
Speaking of books, you've mentioned several books. Is there another book that you really like that you could pass down to our listeners?
Yeah. There it is. Let me go grab it. Hold on, I can see it right here. This is one of the best books read in a long time. It's called The Power of the Subconscious Mind by Joseph Murphy. And this teaches you how to control your subconscious, because you know your limiting beliefs and your actions are all in an auto program in your subconscious. And if you can control your subconscious, I just read this the other day. I don't know how I've lived this long and through it. Usually when I read a good book, I highlight, then I go through and I write an outline so I can keep going back and hit the salient points. That's a good one.
Awesome. All right. So I got one last question before we wrap up, and then I'll ask you, how can people get in touch with you? But so last question. What are your 3 pillars of wealth creation?
Certainly multifamily. I've been doing that forever. The second is cryptocurrency. I'm an early investor in cryptocurrency. And anybody that doesn't believe in it, you just haven't done enough reading. That was one of like multifamily. When I saw that, interview with Harry Helmsley, it was like, wow, that's it. Just like when you said you saw me, before this interview, you said you saw me. There's a bunch of other speakers there, but what I said made complete sense. Same thing with cryptocurrency. I'm an early investor, but not as early as some. I was started in 2018. A friend of mine said, so and so just started investing in cryptocurrency, and I knew this guy was worth half $500 million. It's like, if this guy's worth $500 million and he's investing in crypto, what is it all about? Because I had heard about it before. So I went on YouTube and I watched a bunch of stuff and I was like, holy crap, there's something big here. So that, and what is my third pillar of wealth? That's a good question. I am probably focused on those two things. I'm not really into the stock market. I don't know. What are your three? Maybe it will trigger something for me.
Well, I answer that more of like the mindset approach, but I'm talking like education, taking action, like that type of stuff.
Oh, I see.
Me. But
yeah, well, I mean,
a lot of people answer
right.
it like you just answered with multifamily, with crypto, with stocks.
Yeah.
So that's the fun of the question, because everybody answers it slightly different.
Well, if you asked me what are the pillars of success,
yeah,
then I would have answered differently. I would have answered mindset. The first pillar of success is all about mindset. The second pillar of success is all about taking action. Mm-hmm. And then the third pillar of success is not giving a crap what anybody thinks about what you're doing.
I love that.
Just doing it.
That last one is maybe the most important, just not giving a crap what other people think. You've got to do what you are planning on doing and move forward with it. And you're going to get plenty of people that don't like what you're doing, or, want to be that voice in your head. It's just like, you just can't give a crap. I love that.
Yeah. Don't listen. Yeah. I learned a long time ago not to listen. I learned a long time ago that as long as, you look in the mirror and you like the person that's there, that's good enough. And the other thing was, I heard this quote a long time ago. It said, don't care what other people are thinking about you, because you know what? They're not thinking about you. They're thinking about what other people are thinking about them.
Yeah. Yeah. That's so true. Yeah. That's powerful, man.
Let me give you another book. So there's a professor over at Harvard. His name is Robert Kaplan. And he wrote a book called What to Say to the Man in the Mirror, which is an awesome self-reflecting book. Cool.
Oh man, lots of good stuff. We could keep on going for a while, but we got to wrap up. How can people get in touch with you? I know you got a big event coming up. I think this fall.
Big event called Ultimate Partnering, where we'll have George Foreman there as the keynote. There's typically anywhere from 1,200 to 1,500 real estate investors networking. Call it Ultimate Partnering because people find deal partners there. They find business partners there. They find a ton of money partners there. And it's an event where if you're looking for people that are, we've been doing this event. I've been teaching since 2002. We've been doing this event since 2005. So we have alumni from all the different years. It's like a big alumni event for us. And people tell us it's the event where there's so many people doing deals that just, they've never seen anything like it, which is great. It's just a reflection of people that follow the system, and decide that they're going to be successful. So they all come back and share their successes with each other. And it's just an awesome event. So that's going to be in Dallas.
Do you have to be one of the alumni? Or can anybody join?
No, you don't have to be an alumni. No, actually about 30% of the people that are there are new, which is great because they get to actually network with the people that have been in the business for a long time. It's not like you go to a 3-day class and you're all a bunch of new people coming out of the 3-day class. Yeah. You go to this 3-day event and it's all people with 1,000-unit portfolios, 5,000-unit portfolios, 10,000-unit portfolios. Some people that are just doing their first deal, some people just trying to get their first deal. It's just a plethora of people. And the great thing is we all have the same attitude, and it's an attitude of giving. One of the things I always say at the beginning of the event is, if you're going out with a bunch of people and you walk by somebody, because a lot of people are nervous and afraid to, talk to people or just go up and ask if they can join in. You reach out and you grab that person and bring them with you. And that's the way it is. Everybody's so open and giving and caring, and everybody wants to help each other succeed. The mindset is awesome there. That's one cool. It's like a legacy event I'm so proud of.
Yeah, those are great events where you got good networking, good people. That are there that are actually doing business. So those are the best events.
We've had so many success stories, success teams come out of those events as well. People that met each other there for the first time and now they're doing all kinds of deals together. Or people that went to I had a guy by the name of Jeff Kissy go to an event and comes to me, and he had gone to the boot camp. He got 2 deals under contract. He was hard $300,000. He was going to lose it if he didn't raise $2.3 million within the next 3 weeks. I was like, holy crap, you are in trouble. I said, I'll tell you what, tell me about the deals. All right, I'm going to bring you up on stage. All right, and I will grill you on those deals. I said, there will be people in the room that will be interested. And that's exactly what happened. He was able to raise the funds at that event. And that was the start of a 2,000 unit portfolio. Those 2 deals in that event.
And
So
had that not happened, man, 300K would have been a big.
I'm glad he reached out to me because he didn't know me. I didn't know him, but he just said, Dave, I got a problem. He caught me walking, in between sessions down the hall. It's like, Dave, I got a problem. It's like, what is it? So, it's glad he was bold enough to reach out. So that was good. The other way to catch us is rementor.com. rementor.com.
Cool. All right. Well, we'll put that both in the show notes. We'll get a link to that event in there. And any last words? We'll also put your books too in the show notes because I know you got several books, so we can put that in there, how to get those. And but yeah, any last words of wisdom?
We've said it before, it's all about taking action. It's about educating and taking action. Without the action, you can have all the skills, you can have all the knowledge, but you don't put it to use, nothing changes.
Yeah, absolutely, man. Love it. Well, again, appreciate it. Thanks so much for joining me on the show, and you have a fantastic rest of the day.
Thanks for having me on, Todd. Appreciate it.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.